headline talks about margin weakness, but there are so many other issues at play here. Cash burn, cash raise, Musk's own future. Where do those rank in your list of concerns and worries?
Look, I think the most important thing is the cash burn rate. I also think the margins are going to be important. And I think what people need to look at and what people need to consider, which we think they haven't, is the fact that they did this accounting change. Now they're basically listing more of their leases as direct auto sales. And if you look at the difference between the margins of the leases and the automotive sales, in 2017, lease margins were 36%. Automotive margins 21%. So we think there's going to be a hit on the margin line. We also think the Model 3 ramp costs are going to be significant. So we think there's a disappointment coming on the margin line. So we'd be looking for that.
Stock's at $300 though. I mean, it's like a talk to the hand from Wall Street to the haters, right? I mean, what's going to change that narrative? They're giving you the Heisman repeatedly, yet people still hate on the company.
Hey guys, what's up? Welcome back to the channel. In this video, we're going to take a look at the abysmal failure that is ex-Vertical Group analyst Gordon Johnson's track record on Tesla stocks. And we'll see how his predictions are doing now as of February 2020. So what we just saw in the intro was a clip of Johnson laying out his case for shorting Tesla back in May of 2018. But that didn't work out for him very well, as his predictions fell flat and he lost his job at Vertical Group, along with a ton of money for his clients. Now that's all speculation, but you can see by his positions in the timeline that's most likely what happened. Also, just a snapshot here of his history with Tesla shows his repeated failed predictions, and obviously it's this one in particular that I'd imagine hurts the most. It's been said that Gordon's biggest mistake on Tesla is that he often will cherry pick just a few data points and then put too much emphasis on their significance, assuming that some small financial discrepancy is going to deflate Tesla's stock without considering the fact that basically a ton of people really want Tesla cars. It's the demand for Tesla that keeps them relevant. Their branding and marketing, and in large part the feeling of being associated with ultra-cool genius inventor Elon Musk, those things keep people interested in the brand and excited about the vehicles they produce. And not just the vehicles, but everything else they're doing. Maybe Johnson misses that because he doesn't like Elon Musk, so that sort of star power doesn't work on him as much as it does on some other people. Or maybe he just doesn't get the appeal of it all in terms of, people are just concerned about things such as climate change and pollution and energy sustainability moving forward. And things like that are, to a lot of people, sort of what Elon Musk and Tesla represent, the overcoming of those things. They sort of pioneered the EV industry, Tesla did, and to a lot of people they just sort of represent that forward-thinking mindset with their gigafactories and their, self-driving electric cars. It's almost as if Johnson just has a complete lack of ability to see things from the average consumer's perspective. And so he's a bit surprised when demand for Teslas continues to rise. They just keep growing their EV market share and things like that. Also, maybe, as some people have suggested, maybe he's just looking for media attention, and in pursuit of that, he's sort of blinded by the reality that continues to stare him in the face. I don't know, I can't say for sure any of those things, that's all speculation, but he's definitely missing something, because he just keeps on predicting the collapse of Tesla stocks, and it just keeps not happening.
Gordon, it's all very reminiscent of 2018 at the moment. Concerns about social media policy, concerns about executives leaving. Why didn't the market sell off more?
It remains a mystery to us. I mean, you had the general counsel leave after 2 months on the job. This was a real, if you will, adult in the room. Someone who is respected and was thought to be overlooking Mr. Musk. But what's interesting is the tweet last night.
Basically, in my opinion at this point, back in 2019 when Gordon was speculating on Tesla via Musk's Twitter feed, it's starting to look like he's just not a fan of Musk. And that might be influencing his positions on Tesla because, you can look at Musk's Twitter history and draw the complete opposite conclusions depending on how you look at things. Maybe he did say some off-color things or make some incorrect predictions and unofficial Tesla announcements. Maybe he's a bit of a, loose cannon in that sense. But he's also got a ton of support on social media, and he got a ton of attention from news outlets and other media outlets. And when you're marketing a futuristic energy and car company, obviously any press is going to be good press. But I don't want to waste your time on Twitter spats and, popularity contests and pointless arguments like that. Let's take a closer look at what Johnson was actually saying and some of his past predictions, and just see how those turned out. April 10th, 2018, Tesla is about $289 and Johnson drops an $84 price target, meaning he speculates the stock will be worth $84 in 12 months, citing a move from RBC Capital and Chinese tariffs hitting Tesla particularly hard. I don't blame him. I mean, he's doing his job, he's trying to analyze things, but that one wasn't right. May 9th, 2018, just about a month later, there must have been a move that I can't find in between here, because the headline reads, Johnson and Vertical Group maintain sell rating and reduce their price target from 109 to 99. So I don't know when it went back up from 84 as it was a month ago to 109 as it was here in May. But one thing I do know, thanks to hindsight, is that they are all over the map, yet not even close to reality. These price targets were just way off. But that's fine. That's, you win some, you lose some. Skip forward to June 2018. Johnson puts out another bearish note, this time citing SEC investigations and reiterating his sell rating and price target of $99. Here, to be fair, in the short term, he did make some money because Tesla's stock at this point did take a small hit, and later in August of 2018, Johnson lowered his price target to $88, and again, Tesla did take a small hit amid the going private controversy and all that. The next few months there, you can see there's some volatility, and finally we arrive in April of 2019, when Tesla has definitely seen some decline. They struggled through the aforementioned issues, along with some production hell and things like that, but it's nowhere near the $80 to $109 price target that Johnson predicted. Nevertheless, on April 5th, 2019, Johnson and Vertical Group reiterate their sell rating on Tesla and cut their price target to $54, citing lack of demand, cash balances, basically more of those cherry-picked stats, and also, obviously, lack of demand. That turned out to be wrong. So now, after 8 months of none of that coming true, Johnson again comes out bearish on December 5th of 2019, reiterates his sell rating, and drops his target price to $44. So he thinks by December 2020, Tesla will be worth $44. When he made that prediction of $44, when he set that target price to $44, that day Tesla closed at $333. Today, 2 months later, Tesla opened at $911 as of February 20th, 2020. So again, we can just see, I'm not saying that he was wrong on purpose. Obviously he wasn't wrong on purpose. I'm not saying he had some ulterior motives. I don't know anything about what motivates the guy to do what he does, but clearly anybody who took his advice is probably out some money. And that's the game you play when you invest in stocks, but it's just, why would anybody trust him in the future, right? That's the problem with having a bad track record. So anyways, I just wanted to share some of that with you guys, and if you did like the video or you want to hear more from us, go ahead and hit the like button and subscribe to the channel, and I hope you guys have a good day.
But I think as the stock price falls, you're going to get a lot of people looking back at some of these promises he's made, including the profitability in Q3 and 4 of this year, which we don't think they're going to be able to get to, and I think that's when you'll get some of the lawsuits, etc. But I think what really pressures this stock, in our view, is the competition coming in.
Yeah. Is this a reiteration or is this a new call?
This is a new call for us. We recently initiated on Tesla. The reason why people ask us why did you take so long, because we wanted to see the competition come in, and we think that they have this. Keep in mind, they have this debt maturing next year, March of 2019, where if the stock price isn't at $360, that's roughly $1 billion they're going to have to come up with. So we think there's big risk near term and big risk early next year.
Gordon, it sounds like you're not too hot on Tesla's future here.
No, I'm not that hot on Tesla's future, and quite frankly, we find it kind of ridiculous. I'm a financial analyst, and what I do is analysis. And if you look at what Tesla's done over the past, since their beginning, If you look at their free cash flow, as a business, you need to make cash. Last year, they burnt about $3.5 billion in free cash flow. Last quarter, they burnt $1 billion. And everybody's focused on Model 3 production. And if you look at the numbers that came out from Business Insider, the numbers through June, if you do the math, suggest they're only producing less than 2,000 cars per week. They're targeting 5,000. Elon Musk has put out tweets suggesting they're at 3.5. So maybe the SEC should look into that. But we're not focused on any of that. The point is, do they make cash? Do they make money on cars produced? The answer is no. You did the montage of what they've done over the past few years. Let me give some statistics. In 2015, Elon Musk said they were going to be cash flow positive. They burnt $1.4 billion in cash that year. He missed those targets. In 2015, he said the Model S was going to have a gross margin of 25%. He said the Model X was going to have a gross margin of 30%. That year, they reported gross margins of 22%. I could go on and on. He's missed a lot of targets. He continues to miss targets. He continues to burn cash. I'm a financial analyst. I'm not an enthusiast. And for that fact, you got to look at the numbers, not the man and be an enthusiast about a man. You have to look at the numbers.
Take this stock to $1,000 a share. Obviously, I'm being facetious, but what happened to that? I mean, to me, I don't think you're being harsh enough.